Hi, my name is Janice Benica Carroll, and I'm a branch manager with Finance of America and a loan officer veteran for over 20 years. And in every county, it is no secret, we are all dealing with the same low inventory. And every realtor and every loan officer is trying to figure out that winning solution so that our clients could win, get their offers accepted, and purchase that perfect home. Well, a winning strategy that we've been using with great success is our appraisal gap strategy. And essentially, any conventional buyer putting 10% down or more, we're showing them how to leverage their mortgage insurance to help them make up a fairly sizable gap between the appraised value and their contract sales price without it costing them very much out of pocket. And by going through the details in this scenario and utilizing this strategy, what you get is a buyer that is more confident, more educated, and is ready to make an aggressive offer and win. Let me show you what this looks like. Okay, so in this example, we have a couple and they're wanting to write an offer on a home that's listed at $530,000, and the realtor have suggested that they need to go in around $620,000 to be able to make this offer win. Now, they're putting 20% down, and you remember that you can use a strategy with any conventional buyer as long as they're putting down at least 10%. So I showed them what this was going to look like. In the first column, purchase price $620, house appraises at $620, loan amount $496 because they're putting 20% down, monthly payments $25.57, and required cash to close is their 20% down payment, and closing costs about $135,000. Now, I also wanted to prepare them for the possibility that this home does not appraise at our contract price of $620. Let's say appraised at $600,000. So we have a $20,000 gap. Now we can keep the loan amount the same exact. We can make this work without a lot of cash out of the buyer's pocket. So in this example, we've got $620 purchase price. Keeping the loan amount the same at $496 puts us in a mortgage insurance monthly mortgage insurance environment now, because now that it's appraised at $600,000, we're at an 83% loan to value, because we're going to have to use the lower of the two, of the sales price or the appraised value. But what does this do? The monthly payment has now gone up $45 a month at $2,602, but the required cash to close is exactly the same. In this third scenario, we have the option to buy out the mortgage insurance completely. So if the home only appraised at $600,000 and our contract price is $620,000, we keep the loan amount the same at $496,000. And if we keep the loan amount the same, the monthly payment's going to still be the same, $25.57, but you'll see the required cash to close has gone up about a little bit, just under $1,700. And that's because that's the cost of the single premium mortgage insurance to buy out the mortgage insurance completely. Finally, I wanted to show you what it would look like if that home actually appraised at the list price of $530,000. So now we have a $90,000 gap. So what would this look like? And how do we make this work? Let's keep the loan amount the same at $496. And because we're now, if we keep our loan amount at $496, we're going to be, in the next mortgage insurance, the next higher mortgage insurance bucket. And so that cost of that single premium insurance will now increase because we're at 93% loan to value. You'll see the monthly payments will stay the same because we've bought out that mortgage insurance, and the cost, cash to close, the cost will go up to about $140,000, which is a $5,400 cost to buy out that mortgage insurance completely. Now I can go on the analysis tab and I can quickly show them on the payment breakdown that in this case, it was a $45 that would brought the payment up to $2,600, or we can go to the closing costs and I can easily show them that upfront mortgage insurance premium cost to buy it out in this case was $1,686, and in the fourth column was $5,400 because we were at a much higher loan to value if the home appraised at $530,000, the list price. So we go over all of this information so that we can empower the clients, allowing them to feel that they're making good, intelligent investment home buying decisions. This allows them to feel more comfortable writing aggressive offers, even if they are $90,000 over asking. And this allowed them not only to feel more comfortable about it, but it still gave them an option to keep their cash to close within their comfortable budget. They're so excited. And I hope that you're excited. I hope that you're working with a lender that is partnering with you and that gets it, because it's these types of nuggets that we choose to apply and implement in our career that are going to make the biggest impact in our business in 2022 and allow us to help more families. If you have any follow-up questions, please do not hesitate to reach out to me.